welcome to the closing beat, everybody. Yep, we're live. Sorry, just cleaning up the screen here from the Dow show earlier. How's it going today? Hope you're having a good day so far. If you're an investor, you probably are having a good day. It was a great day in the markets today. We'll cover it all, of course. We're Jazz Wealth Managers. I'm Dustin Tibbetts, financial advisor with Jazz Wealth Managers, SEC, fiduciary, registered investment advisors, all that good stuff. We manage our own portfolios. We did a great class on the Dow show today earlier at 1 o'clock Eastern. If you get a chance, check that out. Thank you so much for doing that. If it helps you in some way, hit the subscribe button. But for now, we're going to talk about the stock market. If you're joining us for the first time, look at all the cool stuff you get to see. We're covering all the markets, the good, the bad, and the ugly. Well, a lot of good out there today. We followed the midterm election results. I was up like all night watching the futures markets, just having a great time with that. Probably would have been cool to do like a live thing, although I was on the laptop just chilling, having a good time. So if you look at the markets over here to the left, you got 2% gains across the board. The Dow up 545 points. That's going to be the headline because 545 is a big number, right? Usually we see that on the downside. Today is what's known as a crash up. So the markets crash down. Typically today was a crash up, meaning it was a consistent, steady day of buying pressure on the way up there as investors really kind of looked at the headlines. Look, if you go back to 1948 and you look at the next 12 months following a midterm election, you get a market that is higher, an S&P 500 that's higher 18 out of the last 18 times. You go back 18 times, takes you to 1948, and that's what you get. To be fair though, we mentioned this yesterday, the markets in any 12-month time period, pick any day, go 12 months into the future and finish on that day, and the markets are higher 65% of the time. So it's kind of a misleading stat in that case. And I love stats, but I also like to point out when there's maybe a little bit of flaw there in the stats. So what does this mean? Democrats take the House and Republicans keep the Senate. Did I say that right? And so we've got a split Congress with a Republican-led White House. Well, what that means is nothing's going to get done, right? Nothing's going to get done. No healthcare repeal, no healthcare expansion, no infrastructure, no tax cuts, no new regulations. And that's awesome for the markets. Maybe pretty crappy for the country, but the stock market looks at that and says, great, Washington's going to go duke it out for the next 2 years and really sort of celebrate or cheer the stupid little things that they get done, but nothing major is going to get done because you're just going to have both people fighting. It's just going to be an absolute back and forth bloodbath. What does that mean? As far as the markets, yes, we can focus on earnings. We can focus back on interest rates tomorrow. But it means that in the short term, for the next 2 years, you've got headline risk. And that's just a fancy way of saying traders will be adjusting daily based on the headlines that come out of Washington. Yes, we're going to do the debt ceiling, and then no, we're going to close the government. You know, the whole thing like that. So a lot of that's going to come out. What you need to know is even though the markets have been higher 18 out of the last 18 times, the 12 months following the midterm elections, it hasn't been straight up. There's been a lot of wild, crazy back and forth action in there. So again, sort of a misleading stat. Careful if you pay attention to that. The stock markets continue to repair themselves. We mentioned yesterday about the leash coming off today once the midterm elections were sort of solidified. There you go. That's exactly what we're talking about, the leash coming off things there. So from where we're at right now, great day today, obviously a great rebound off of the lows from October. Where we're at right now, you're kind of cool if the stock markets just stop for a while. If they sell off for the rest of the week, as long as it's not too aggressive, or they just trend sideways and not a lot gets done, you're sort of okay with that, right? It's like the market sold off really aggressively, took a little break, and then bounced. From here, we've had an aggressive run up a very steep hill. Just like in real life, you can only run so far up a steep hill before you're going to want to take a break. So if nothing happens for the rest of the week, I would actually love that. I love when markets stop after big moves up or down because it gives people a chance to justify whether they're going to continue selling or continue buying. So let's take a look and dive into all this goodness here today. Here's the S&P 500 back above the 200-day moving average. That's going to grab headlines, of course. The Nasdaq 100 doing the same, breaking through the recent downtrend, getting above the 200-day. And we mentioned yesterday the Dow was already over the 200-day, so it's kind of like icing on the cake for that one. If you look at the Russell 2000, that's going to be your leader. What happens to the economy, the overall stock market going forward? That one's still a little behind. So careful, right? I think the headline risk will affect that sector or affect that area of the market pretty intensely over the next, as we get settled in here with the new government makeup there. Okay, so as far as investors are concerned, tomorrow we're going to shift back to interest rates. If you look at bonds today, they moved back towards lows, meaning rates were up a little bit. Interest rates tomorrow are widely expected to be held in check by the Federal Reserve. Nobody's really expecting them to do anything. Language, that will be the big thing tomorrow, is what language comes out of the Federal Reserve. So in the meantime, you can see bonds basically just creeping higher a little bit. We'll find out tomorrow afternoon exactly what what's going on, and we'll cover it. Healthcare stocks, one of the big leaders today, because when they were polling people at these election places, they were saying healthcare was one of the biggest concerns. Now, if that's your biggest concern, guess what? Nothing's going to happen over the next 2 years, because not one side is going to agree. They have very different opinions on what should happen with healthcare, from repealing it to expanding Medicaid, Medicare, right? So it could be a little bit messy. Healthcare stocks are largely, and hospitals and providers and insurers, things like that, largely expected to benefit from that, because two words, status quo. So a lot of people don't expect much. You look at Humana, that broke out to new highs today. Anthem broke out to new highs today. There's a bunch of others in there. Well, geez, there's a bunch of them. So if you're looking through the healthcare providers, you could look at it as a sector here. Just looking at the XLV is an ETF that tracks all of that. That looks pretty good. So a really, really good day there. A lot of people think not much is going to happen. I happen to be one of them. Tech stocks, big day for tech stocks, 3%. Amazon really leading the way there. Almost a 7% gain on the day for Amazon. Out of the FANG names, if you happen to look through, you got Netflix up strong today, Alphabet up strong today, and then Facebook. Facebook just can't be a participant in the FANG area. They're better, get their act together, or people are going to start dropping that name from the mix, considering that it's hovering near the lows there. So out of the tech stocks, you had like Adobe. Adobe's a good one today, one of the leaders, about 5.5% on that one. Microsoft, about 4%. Very strong looking chart, by the way. So that's some of the sector-related news. If we go into emerging markets, they had a good day as well, attempting to break out of this downtrend. You could see it. I don't have to draw the line, right? Big old downtrend here, and depending on how you draw your downtrend line, it is either very close to breaking out or has just recently broke out of that downtrend thanks to today. Emerging markets really could use that rally, so not bad there. Let's go over a bunch of stocks here. Well, let me cover semiconductors. That's going to fall also into the tech space. One of your weaker areas, not quite back to the 200-day, not quite back to that downtrend that we're focused on, the midterm sort of downtrend that we've been pointing out there. And financials breaking above. Notice the volume when it broke above today. You had a lot of traders come to that area, buying that that breakout there, because that creates a new sort of wave of buying. So that was all over the place. And the individual stocks that were in there. Individual stocks that had interesting days today. Michael Kors down 14%. They reported earnings actually that were better than expected. Everything was really good there. What did we say about Ralph Lauren yesterday? Ralph Lauren mostly did okay, but sales in Europe were lower. 40% of their stores come from are in Europe. Michael Kors, same thing. Europe sales a little bit weak. Is that some sort of hint as what's going on over there? So, people look into that a little bit deeper. Michael Kors down 14% today. That's 50% from the highs, right? Let me see. Is this the one I looked at earlier? 50% from the highs. Yeah, how about that? So you got Michael Kors. Yeah, that's a 50% discount. I don't know. It's kind of interesting, isn't it? Papa John's higher by 5.5% today. Get this. Earnings, whatever. They missed on earnings, missed on revenue. But everybody was excited because their store sales fell less than expected. I hate when that comes out like that. To me, that's just weird. The store sales fell 9.8%. Everybody was expecting 10.7%. So although they did see less in sales, it wasn't as low as everybody was expecting. That's sort of a weird, weird thing to look at there. But if you think about it, maybe they're starting to turn the corner. They've obviously been in the headlines quite a bit lately. Match.com. These guys own, Match.com. They own Tinder, a lot of other little names along the way there. Tinder, of course, everything revenue better, earnings better than expected, revenue better than expected. That's what I was trying to say. but the revenue per user was down, and that's one of those metrics that they focus on. We always try to point out when it's subscriber growth or store sales that people are looking at. This one is revenue per user because it's an online sales company when you kind of boil it down, so that's what you got there. Michigan, by the way, go smoke all the pot you want in Michigan because they legalized it. So Tilray up 30% today, still overpriced. Canopy Growth had a good day today. If you're one of those pot stock people, then you've probably already seen this. 8% on Kronos and a couple other names there. North Dakota said no. So it didn't pass in North Dakota, only in Michigan. We pointed out Amazon, all looks good there, back above the 200-day moving average. And Alexa speaks Spanish now, so, you know, arriba. Salsa, salsa. It speaks. Target up 1.3% today. It was upgraded overall, and if you look at the retail stocks as a whole, this one sort of sticks out. Nice relative strength in Target if you happen to be a retail trader. Wendy's, didn't do too bad. Wendy's actually closed only down 2% on the day. You could see if you know how to look at candlesticks, it was down here at one point on the day at about 15.5. Earnings per share were good, lower store sales, and they lowered their forecast for those store sales going forward. So kind of interesting there if you follow that one. They've got a funny Twitter account, by the way. Twilio, so 35% gain on this. This is actually one of the best performing stocks for the year. If you happen to keep track of stuff like that, it's up over 200%, now 230% on the year. So earnings beat by a friggin' mile, man. They just killed it. Here's the thing, though. Best performing stock of the year, they have a $7 billion market cap, $424 million in sales, and they lose money. Careful. You better be awfully confident that they're going to start to make a profit. Dish Network's down 2%. Basically, the company lost 367,000 satellite subscribers, and everybody was expecting them to only lose 232, added 2% on the day. Etsy, if you happen to participate in that, apparently a lot of people are. Their merchant transactions are actually higher. Stock added 23%. They beat on earnings. Everything was good there. Merchant fees from the transactions were one of their bright spots there. Virtu Financial, I'm done. Virtu Financial did really well today. If you don't know who they are, it's an incredible company. Put it this way, they do a lot of trading. They never lose. Imagine that. Imagine if you could be a trader and never lose. How do they never lose? Did a great video. I don't have the link. It's in there. I did it on how does Robinhood make money? How does us and Folio actually make money off of the trades? So complete transparency there. Virtu is a company that we use. We actually sell our orders to them and they pay us for that. Same thing with Robinhood. That's the reason why Robinhood is free. They take your order, they sell it, those guys pay them, then they take all those orders and they do whatever they do with it in great, great detail to make a little bit of money there. They also decided on a 24-cent dividend. They changed it. And they're buying ITG for $1 billion. If you're in the industry, you know what ITG does. They're buying them for $1 billion. I think that's a steal. I think it's going to be meaning good things for me, our customers, Folio, the company that we use, the brokerage firm. Good stuff there. TJ Maxx, depending on how you look at this, so TJ Maxx sold off, it didn't sell off today. It was higher by 1.1%, but it was a split. 2-for-1 split on that one. So that goes through today, now trading at $55. You basically just have twice as many shares at half the price. We've covered that in a video as well. So that one sticks out. On the downside today, Coty was your biggest loser. These guys do makeup. If you want to start a makeup brand, but you don't know how to make the makeup, these guys will make it for you. Apparently that was popular, not so much anymore. CarMax flirting with making new lows there. I thought that was interesting to point out. General Electric almost making new lows on the day. Home builders taking a little bit of a break. That is one of the weaker sectors, but people have been going over there to try to buy that dip a little bit. A lot of other retailers were down a little bit on the day. That was some of the weaker stocks that we saw. Here's Gap, that was down a little bit. Under Armour was down a little bit on the day. Nordstrom, where's that one at? Nordstrom was down a little bit. All sort of strong stocks, especially Under Armour and Nordstrom. Not too bad. PVH, that's Calvin Klein and the like. That did pretty good. That one was down about 1% on the day. Qualcomm reported earnings after the close. We'll cover that one tomorrow. Foot Locker down a little bit. So when you're looking through, Ulta Beauty was another one down a little bit on the day, but all after having really good, really good moves there. So not a whole lot that people were complaining about there today. Like I said, you got healthcare, energy stocks, you got big cap tech, your Amazons, Adobe, things like that, all stronger on the day. A couple airlines, American Airlines up 5%. That one gets a little attention in my book. MasterCard, Visa all doing really well. PayPal a little higher. Square reported earnings as well. We'll cover that tomorrow. Intuit did really well today. So a lot of really good things going on across the board there. So hope you had a good day. Over here to the left, you see a 5-minute chart of the markets. That's every 5 minutes what happened in the S&P 500. You can see it was up and away, very steady, very consistent through all the day. Really, it was very, very consistent. Add to that with the Washington news that came out. Usually that stuff comes out the night of, by the way. So getting rid of the Attorney General Jeff Sessions. Usually when that happens, it's overnight. When you're paying attention to the midterm elections, they chose to do it today, in my opinion, because the Republicans did a lot better than they probably thought they would. And so as you know, CNN and MSNBC were all saying, well, I guess we're not going to take over the world as Democrats. Republicans didn't want to get in the way of that, because had they mentioned this last night, you betcha that an NBC, CNN, NBC, MSNBC, they would have all switched their narrative to focus back on the negative there. So pretty smart. If you like the Republicans or whatever, at least the strategy was smart there. We don't really get into much more politics than that. Little questions there if you have any. Happy to answer. David, are you sure? I'm fine with reporting. Pretty sure I don't pay on it. I'm not sure what you mean, David. Help me out a little bit. AT&T long term, I can't actually give specific recommendations. Big dividend stock there, of course, obviously discounted in the short term there. Made a ton of acquisitions this year, so it's kind of understandable that they've spent a lot of their cash. The stock price is going to be pushed down a little bit. If you think that's all going to be good things for them moving forward, then I couldn't argue with you there. When's Robinhood going to be the Canadian version? I don't know. I don't follow them. I watch the industry news just to see, but I don't really keep track of what they're doing. Boeing, one of the really, really strong stocks out there. Kevin, if you're a technical trader, you love what happened the other day after earnings. That kind of reversal on a candlestick chart grabs the attention of the technical traders. You didn't think any dividend within a Roth would ever be taxable. I'm not sure what you mean there. You get a dividend, if you have a dividend stock in a Roth, it just goes right into the Roth. There's no, I don't know what tax you're talking about. Oh, I missed whatever those questions were, sorry. There was a lot going on today, but it was nice. You know, you like to have a lot to focus on. All right. So you guys are talking about some dividend MLP stuff. Good. Yeah, I love it. Engagement there. You're a new investor. What would you recommend for me to start learning? Press the button, right? Start very, very small, Alonzo, and press the button. You think you like something that's interesting, it doesn't care what it is, start very small, as little as you can buy of that, just to get your foot in the door, because nothing is better than watching a position win or lose money. It's like when they say, how do you learn to fly a plane? You sit your butt in the seat, you turn the plane on, and you go, and let the guy next to you tell you what to do until you figure it all out. You can't learn from a book. You're not going to learn by flight simulators and stuff. It's a good starting point. Get in there and press the buttons. What happens, Alonzo, is as you press the buttons, you have a question. Whoa, I pressed the button. What happened? Okay, I own the stock. It's higher. When do I sell it? Okay, I'm going to try to sell the stock, but I'm going to use a stop loss. How do I do that? I'm going to use a trailing stop. How do I do that? Wait a minute, half the money's mine, half the money's the brokerage firm. What does that mean? What's margin? So as you keep going by pressing the buttons there, you will learn. I promise you, I promise you, I promise you. What is the best metric to use to measure risk? Sharp, Sortino, standard? Depends on what you're doing. Long-term investing versus like day trading, things like that. If you're sort of active trading, then you're really only concerned, and you want to track this as accurately as possible. How often do you win and by how much? How often do you lose and by how much? That will make all the difference. Okay, well, that's all I have to offer you today. We got all kinds of great stuff today as far as the markets go. We're going to cover all the earnings tomorrow. I just got backed up with everything I wanted to cover, Roku being one of them. Lots to cover on that one, actually. Hopefully you own it there and it's doing good. Fractional shares make a put. Yeah, we do fractional shares too, Daniel. So very important. If you happen to be investing somewhere where you are smaller, fractional shares are a big, big thing. We work with a lot of beginning investors, and we, of course, use fractional shares for them. Make every single penny count. You're making $40K a year. You're maxing out your Roth TSP and Roth IRA. Are you being too aggressive? As far as like the investments go, that's the question. Are you being aggressive with the investments? Are you investing in a way to get you towards your goal? You may need your Roth and your TSP to get you to your goal. So I would say, I don't know how to say if you're being too aggressive, but you know, look at the investments inside of it there. Hey, James, how's it going? Cool. David gonna shoot a question. Oh, cool. Thank you, sir. I appreciate that. Can we do a video on stop loss and limits? I believe we have. That's a great one. I actually love covering that. I could talk about that all day. So that's a great one, lady. I like that. Cool. Very good. Well, anyways, hopefully you enjoyed. If there's something we were able to add for you today, or you had a good day, or you just like the channel, hit the subscribe button. That really, really helps us. I really appreciate it. We've got many good things coming, but I am trying to keep my mouth shut for now. So far, so good. All right, we'll be back tomorrow to do it all over again. If in the meantime you have a comment, leave a comment below. If you have something you want us to cover, leave that below as well. I do look through the comments. I haven't had a chance to respond to them today, but I love doing that. So that's really all I have for you. I really appreciate you guys watching. Enjoy the rest of your day. We'll see you tomorrow. Do it all over again.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.